I'm Greg Hunter. Welcome to USAWatchdog.com. With us again, one of our most popular guests. His name is John Williams of ShadowStats.com. John Williams, thank you for joining us today on USA Watchdog.
Greg, thank you so much for having me. It's a great pleasure to be with you again.
Well, I got to tell you, I'm very excited in kind of a bad way, because your thesis about what could happen and how this hyperinflation starts isn't about, labor costs going up. It isn't about any of your traditional ways of thinking. It's about the trillions and trillions of dollars held outside the country and somebody running for the exit door and dumping this stuff. Now, what's going on in Ukraine is providing a geopolitical trigger, not an economic trigger. The Russians are saying that, hey, listen, America, if you put sanctions on us, we're going to crash your financial system, and we're going to sell all of our dollar reserve currency assets. Could they crash the U.S. financial system by dumping their, $200-300 billion in Treasury bonds?
Yes, that it certainly has a potential to do that. Looking outside the United States, there's something over $16 trillion of cash or near cash, and that's effectively the same size as our GDP, and about the same size as our broadest money supply measure, M3, which the Fed doesn't track anymore, but which I do. Nobody's wanted to hold the dollar here for some time. The dollar fundamentally is weak. It couldn't be weaker. All the major factors are against it. It's just a matter of what would actually trigger the massive selling. Nobody wants to hold it. The Russians start selling. You have China, which has indicated a general alliance here in terms of what's transpiring. If the rest of the world believes this is going to happen, people who've been wanting to get out of the dollar for some time very easily could front run the Russians. The scare is on. People will try and get out of it as rapidly as they can. Be disastrous for our markets. All those excess dollars coming in, the bonds being sold, interest rates will spike. Stock market would sell off, and we'd see inflation. But to prevent that, to try and keep things stable, the Fed would tend to buy up those treasuries, intervene wherever it could to stabilize the circumstance. It's going to be very difficult, and it's going to be very inflationary. What you have to keep in mind is that back in 2008, we had one of the greatest financial crises the United States ever faced. The system was on the brink of collapse at that point in time. What the Fed did, what the federal government did, was they spent every penny they could, anything they could create, guarantee. They bought up big companies that were key to the system. They did everything they could possibly do to keep the system from crashing. They guaranteed all bank accounts. So they saved the system. But now, what they did has not borne fruit. We've not seen an economic recovery. We've not seen a return of health to the banking system. So the system is very vulnerable. And you get something here, if the Russians really carry through on their threat, you have the risk of indeed collapsing the system.
This would be the end of the world as we know it in the U.S.
If it works out, if you follow through, and it does have the effect of creating a hyperinflation, which I think it would. There are any number of things that could have triggered the sell-off and the flight from the dollar, such as a bad economic statistic or some blunder in Washington. It's a type of circumstance that will not allow life to continue as we know it, because the U.S. is not able to handle a hyperinflation. We're not structured for it. Unlike Zimbabwe, which had probably the worst hyperinflation anyone's ever seen. They were still able to function for a while with the economy. People continued to work. They get paid in what was rapidly depreciating currency. So rapid that it almost became worth like toilet paper overnight. They would go to a black market and exchange it for dollars. We don't have a black market to escape from our dollars with. Gold is probably the closest thing to that. Gold will tend to rally here as the dollar sells off, barring very heavy intervention by the central banks, which you may see. But the fundamentals will eventually dominate, and you'll see a very weak dollar and very strong gold coming out of this.
Could there be a run on gold, a flight to gold, a run to gold, not a run on gold, not people selling, people running to buy it?
We've already seen some of that. Historically, the U.S. used to be the traditional safe haven in a political or financial crisis, but that hasn't been the case for 4 or 5 years now. Instead, what you've seen is that the flight to safety has been into other traditional safe havens, such as gold, such as the Swiss franc. But the dollar has lost its magic there. Again, nobody wants to hold it. So if the Russians follow through in this, or can convince the rest of the world that they're going to do it, if it looks like China may join them, there are a lot of countries that are looking to dump dollars and get out of there ahead of the crowd.
16 trillion U.S. dollar or liquid dollar assets held outside the country.
Yes,
that's a lot of stuff to dump.
It is.
Well, the dollar. Go ahead.
No,
the dollar hasn't been. Last week it was down 0.5% in a day. It's down below 80. I've been following your reports, and either things are revised lower or coming in lower. It looks like the economy is rolling over. This couldn't come at a worse time. What's your appraisal of the economy?
It is rolling over. The numbers are showing that we're starting into a new recession. What will be a formal recession. You should have an actual quarterly contraction in the first quarter GDP. One of the better leading indicators to things like that is retail sales, and that gave a clear recession signal in January. It was the strongest recession signal seen since September of 2007, which was 3 months before the official 2007, what some people call the Great Recession, took place. I'll contend it never ended. What we're seeing here is really a double dip. But however they record it, the economy is turning down again. That's bad for the dollar. It's bad for the markets. It's bad for the budget deficit, because all the forecasts on the budget deficit are based on positive economic growth going forward. All the sensitivities, all the crises that are in place have been in balance, very delicate balance. And something like this just throws the whole system out of whack and can have a lot of unintended consequences.
So it looks like your predictions for the beginning of hyperinflation are going to be dead on. They start here in 2014, either with a financial trigger or this geopolitical trigger in the Ukraine.
Well, it's the dollar's been vulnerable here for some time. All the major fundamentals couldn't be more negative, and it's just a matter of what triggered it first. This looks like a good candidate for doing it.
John Williams, thank you so much for being on USAWatchdog.com and telling us what's going on with this Ukrainian situation.
Always a pleasure.